Hello, and welcome to our Carrier Updates series, where you get product updates straight from our carrier and vendor partners. You'll find out things like, what do the new plan designs look like? Or is there a new network option that you need to be aware of? Which plans offer the most savings to your prospects and your clients? And what tools and resources are available to help you in your efforts? In the end, we want to help you win more business and retain your clients throughout the year. Visit our website to watch all of our updates, or follow us on LinkedIn to join the conversation. So buckle up and enjoy the show.
Well, hello and welcome to another edition of our Carrier Product Breakfast Series, hosted by Legacy Brokers. And our featured carrier for this edition is Principal Life Insurance Company. For those of you not familiar with Legacy Brokers, we are a health insurance general agency, and our main focus is really to help agents differentiate themselves from the competition. We do that using a vast network of carrier relationships and vendor relationships to help agents build, protect, and preserve their book of business. I'm your host, Jason Powers, and my role here at Legacy Brokers is that of Chief Business Development Officer and Employee Benefit Specialist. I'll be joined today by my DJ and co-host and our beloved CEO here at Legacy Brokers, Rick Finfera. He'll be spinning the tracks back in the background, assisting with any questions you've got along the way. The rest of our team here at Legacy is on board as well. Bob Dill serves as our Chief Operating Officer. Tyler Bean is our Account Coordinator, also known as our Form Fire Ninja around here, and Stephanie Douglas, our Office Manager. Process for today: you are in listen-only mode as an attendee, but all participants will be in that mute. You're muted throughout the presentation. The meeting will be recorded and posted to our website for future viewing at your discretion. If you've got questions for our guest along the way here today that are topic specific, use the Q&A feature in the Zoom app, and the button looks just like the one on the screen there. Rick can unmute you and then bring you into the panel to ask your question live during the presentation. If you've got technical issues with Zoom, such as sound or video, use the chat feature to chat with our team here behind the scenes, and they'll see if they can help you sort through those problems. And if you've got a question along the way and just need to interject before we move on to any further screens, use the reactions feature in Zoom to raise your hand, and we'll certainly see that and call upon you to ask your question. As a reminder, the first 12 attendees that registered and attend receive a $25 gift card to Uber Eats. That's our way of making sure we do maintain a breakfast setting for this virtual meeting. It is my distinct pleasure to introduce to you one of my favorite people on the planet. Greg Cain is the sales executive of Group Benefits there at Principal Financial Group.
Correct. So I do appreciate it. Thank you so much for the opportunity and the kind words. I mean, I've been a principal for about 11 years now, actually 10 years, but been in the industry for 23 years. And Jason, you and I have, of course, known each other for a good chunk of those years, and I do appreciate it. My background, just some history. I was an underwriter my first 5 or 6 years in the business, so not always been in sales. Underwriter my first 5 to 6 years. Spent a year in marketing, and then I've been in sales for the last going on 18 years. Actually, 18 years in about a month. I'll be 18 years to the day. So I'd like to think I have some background and some experience in the industry. I'm still learning. I would say I'm not a natural salesperson, but I've made it work for a while. So I do appreciate the opportunity and thank you. You know, ancillary I think serves a really good role in this industry. I mean, I've always been on the ancillary side. Initially as a dental only underwriter, then I kind of transitioned into all lines of coverage, and then of course a principal, I expanded that even further. It serves a really good purpose, I believe, in every agent's and every broker's book of business. I mean, the medical always drives the bus. Jason and his team are really good at that. That's going to drive a lot of your overhead, a lot of your questions and concerns and challenges that come from your employers and your clients. But the ancillary stuff complements that. And a lot of times, Ansler can drive that profitable revenue. I mean, you already invested in your expenses on dealing with your clients and growing your book and maintaining your book. But adding ancillary benefits, expands that revenue source. You get down to the business of it for those clients, right? So it doesn't take a lot of extra work, but it's certainly extra revenue for you. So I think Principal is a great company. I've worked here for 11 years, but you can really say I've been here my entire life. Full disclosure, my dad worked for Principal for 40 years, from 1966 to 2005. And then I came here in 2011. And I love the company. I think and if you've done business with us before, and it sounds like the majority of you have, and there's a few that have not experienced it, I think you understand our culture, you understand how we operate and how we deliver our services, and I think you'd also understand that we're pretty good at what we do. We're very clean. I think when we do it, it's not always right. We're not perfect. We do make mistakes, but what you'll find is that we have a dedicated team here in Kansas City. It extends our home office, but I'm in Kansas City. We have a local team that's dedicated to Jason and his folks. And I think you'll find that we are really good at making sure it's right quick. And it's almost always right out the chute. And then once it's up and running, it's always clean. But we're a pretty good team to work with. And that's one thing I really enjoy the most about being part of the Principal team. Obviously, we are a traditional group. Jason, I can't move it. How do I move? Oh, there we go. My bad. Little operator here. I got it. We're a traditional group carrier, right? So we're non-medical. We're going to have a traditional suite of products, but just high level stuff here. I mean, I'm not going to spend a lot of time on all these slides. We're going to kind of touch on a few things for everything we kind of do, but it's going to be at a really high level. Now, throughout this conversation, if you guys have questions, throw those out. The one thing I like about what we do is we're very flexible. We can adapt and deliver a solution in nearly every scenario. But right here, we just talk about, the longevity of our company. We've been in the group insurance business for 75 years. For those of you who've been around for a while, you might remember us in the medical industry, in the medical field, and the health insurance, and that's where my dad was. And so, our company was really built on health insurance. We decided to exit a few years prior to the ACA, and looking back, it might have been the right decision. But we have a lot of financial strength and a lot of history and a lot of experience in this industry. We're the number 3 provider of group benefits. We write the 3rd most contracts in the industry, and we write a lot of groups. And we're very good at small case. I think it aligns well with Jason and his team, and I think it aligns well with the folks that they cater to best, which are you guys that are on the call. So again, we appreciate it. All right, and then we just kind of for further explains, broad portfolio, flexibility. We've already kind of touched on that. The local sales support. We get into the true benefit solutions, and we talk about dental insurance first. We do offer full suite. I think we lead with dental. Dental can be sometimes a regional. Again, from a dental insurance perspective, a lot of flexibility. Anything you want to create from the dental perspective, we can build. Deductibles, maximums, procedure layout, flexibility in that regards. I will say that our network allows us to really drive savings, and in the areas where we have a strong network, we really can get competitive. But I'll also note, sometimes our network doesn't deliver exactly what a client wants. Maybe the owner has a specific dentist that isn't in anybody's network, and so we couple our strength in network with really being able to maximize what that out of network benefit is paid at. If you're familiar with dental insurance, you know what usually customary is. Most carriers will default to the 90th percentile. We like to go to the 99th very quickly, particularly in an environment where we know there's sensitivity to where the dentists are, maybe if the dentists are or maybe are not in our network. And what the 99th percentile does is it basically eliminates any true need for a network, because we're going to make sure that what the dentist submits in regards to claim, we're going to pay in full in regards to the co-insurance levels. There won't be any balance billing. So we do leverage that quite a bit. The provisional stuff I already talked about being able to move procedures around. I think another key piece to the puzzle, and in the industry, I think this has kind of transitioned over the last several years, but we don't really, everything we do is 3 lives and up. If we can do it on a 1,000 life group, we can pretty much do it on a 3 life group. So again, a lot of flexibility, a lot of strength in delivering that product, no waiting periods. So if you put a plan with us, You're not going to have to tell your members, your clients and their employees that, yeah, you got great benefits for preventive and basic, but your major services in ortho, you have to wait, a year or 2 years. Every benefit we quote is available day one on the plan. And that's every year. So whether an employee waives coverage or enrolls in coverage, if they do waive and they come back on the plan at the next anniversary date, again, no waiting periods. It's a full open enrollment every single anniversary date. So it makes it really simple for you. Again, it points to the reality that when we put a plan in place, you're not going to get a lot of calls and questions about, hey, my dental plan didn't pay the claim right. And I think that's important for you for an agent. Talk about again, some additional kind of value adds. We've already talked about no waiting periods. Again, deductible. So we do give deductible credits. So if you were to move a plan in the middle of the year, all those members who might have satisfied deductible, we're going to give them credit for that. So they want it to resatisfy. We'll also refresh their annual maximum. And then for those of you that do business with other carriers, and there's a lot of good carriers in the marketplace, you probably have seen, the max rollover feature from a number of our competitors. We also have a max rollover benefit. So not only does the max refresh at our initial effective date, if the prior plan had a max rollover, we'll credit all of those max rollover accounts into the principal claim account as well for all those members, so they don't lose those dollars. Again, really important for those employees and members, and it just makes it just easy for folks to make a good decision for their dental benefit needs. Transitioning over to disability insurance, I think that's one thing we do really, really well. We can talk about the basics of short-term disability, long-term disability. A first day accident, 8-day sickness, 13-week benefits, 60% to 1,500, whatever it might be. 90-day qualifying period for LTD. I mean, all the basics we do. I think we do it really well. I think what sets us apart is our ability to have a very strong definition of disability. And what that means is that we're usually going to pay a claim either earlier, and sometimes not, because if it's a really black and white claim, then we'll all pay the claim the same, whether what carrier you're with. But almost always we'll pay a claim longer for your clients, and we might pay more as well. And so again, it goes back to kind of setting that expectation that like we're putting in place a disability plan, we expect it to pay. Our plan, because of how we defined our definition of disability, you'll see right there it says residual. It has an or definition there. That allows us to have maximum flexibility to pay a claim, as opposed to a lot of our competition has an and definition. And what does that mean? It's most contracts in the industry will have an occupation test and they'll have an earnings test. And some of our competitors will require both of those tests to be met before they'll say yes to paying a claim. We allow that to be one or the other. Again, just a little bit more flexible to approve a claim and then maintain a claim. I go back to my example of a lot of us might pay the claim, the same date on the front end. If you have a salaried employee that just like as an office manager, they get in a car accident, well, that date of disability is the same for everybody, and they're not working and they're not making any money, so they're on claim. But on the back end, if they have some rehab and it gets prolonged, and maybe there's a point in time where they can do all of the duties, but because they still have fatigue or whatever, they can't work all their hours. Our contract allows potentially, and it's usually almost every time, to pay that claim a little bit longer, maybe another month, maybe another year. It doesn't really matter. Every situation is unique. But because of the way we define our contract, it just makes it easier for claims to be paid.
Greg, you say that, and I mean, I feel like it's as a producer who's focused on group health my entire career. I actually had this situation come up recently on a case where the existing carrier's contract and their rates were pretty close in line with principal, and the agent we were working with was trying to find a way to unseat the current carrier and win the business with principal. And that one word differential here on the residual definition of disability is what won the case. It was really pointing back to their current contract had the tests was and then principals test was an or, and that's what really unearthed inertia to get that case to move, and that producer won the business. So it's interesting to me to know that, you know, it really comes down to contract language sometimes versus you know, as a group health producer where I'm looking at deductible levels and out of pockets all day long, really dive into the definition of disability and trying to figure out the difference. So I just want to point out, like, that's that one word won a case where principal was not any better on the premiums, but that was important to the decision maker.
Right. And the other piece of that puzzle, Jason, if you recall, so the or, I'm going to point with my clicker. So I'm going to point to the or here. Another key piece was this piece right here, the business owner compensation. So we are unique in the industry in how we handle business owner shareholder comp, and therefore shareholder claim. So your most important, you know, employees, your most important members of your clients, the owners and the shareholders, we are far superior in the marketplace in how we treat them as opposed to our competition. So the or definition is important. It is key. I think it's a big deal for the right group and the people that understand it, and you're trying to create value in regards to what you're providing your clients. The business owner compensation is a huge differentiator, and what that means is, so, you know, if I haven't said it yet, you know, principal to its core, we are a small case writer. I think I mentioned it earlier when I was kind of talking about principal, you know, just generally speaking. We're a small employer writer. We are very good at writing groups under 100 employees. You can say probably 200 employees and under, but we're really good under 50. And typically, most employers that are under that case size, they're usually filed as or organized as an LLC or an S corp. And in that environment, the shareholder class, the owner class, they're going to get some level of W-2, maybe $100,000. It depends on how profitable they are, but usually the number is about 100K, 120K, in that range. And the rest of their income is driven through K1 income, K1 profit distributions. And how we handle that uniquely and differently from our competition is we will always include K1 in the earnings definition. So K1 will always be included. Is that a big deal? I don't know. It may be. Depends on how the plan's structured. But on the back end, it does matter. Because on the back end, so if we have a claim come in and the owners take 100K of W-2 income, and it's been a company that's been in business for a long time and it's successful, and they're making, let's say, $200,000 of additional K1 profits. That's $300,000 of income every year. Okay, and we're going to include that entire chunk in the earnings definition. Now, most plans will not deliver. Now, we can if we need to, depending on the group, but most plans will not deliver a $15,000 monthly max. You know, can we build a plan like that? Well, we can. When we talk about standard plans in the industry, it's a $6,000 max. That's usually what's very typical. And $6,000 covers, from an income exposure, the first $120,000 of income. Okay, so $120 of income is what's covered. The owner makes $300,000. So I know we don't have a whiteboard here, so work with me. But if that person goes off on claim, they own the company. They're not going to take a pay cut. You know, they're going to keep their money as best they can. So our or definition allows them to do that. They're disabled. They can't work. They can't do all their duties. So they're by definition disabled. They haven't taken a pay cut. Well, that's okay. We have an or definition. And then when they qualify for claim after 90 days or 180 days, at that point in time, we can start delivering a benefit. Now, if they haven't taken a pay cut, well, we're not going to deliver a benefit, right? Because there's no loss of earnings. However, because of our claim, because of how we handle broker business owner compensation, they can remove the W-2 income from their stream because they're not working. Technically, they can't take W-2 income because they're not working. We will pay a full benefit. So they make $300,000 a year. That's a $6,000 max. That covers, you know, $72,000 a year. They're going to remove their $100,000 of W-2. They can keep their full K1 distributions. We'll pay our full, benefit, and they're almost whole to where they were before.
Yeah.
As opposed to my competition, if they continue to receive K1 from the business, that's income from the business.
Yeah.
And they'll offset the claim for that. And so that $72,000 benefit they thought they bought from you is now basically zero because of how the compensation is built. And that could be a huge difference. That's a $72,000 difference for that situation. And a lot of times we're talking about, higher maximums with those kind of folks making that kind of money. So that's where we really stand apart. And that's where I go back to, we're going to deliver a contract that eliminates a lot of noise. It's going to eliminate claims being paid wrong or maybe closed prematurely or denied altogether. Because of how we build our plans, it's built to really maximize claim payment opportunity. We sell these benefits to pay claims. Last year alone, we paid nearly $2 billion with a B of life and LTD claims. That's a lot of dollars going out, and we're still hitting our numbers. So it's not like we don't expect to not pay claims. We want to pay claims. We want to pay the right claims. We want to make sure they're paid the appropriate amount of time. So those are the two key points I'll talk about disability. They really set us apart. And I will tell you, if there's a chance where we need to dig into a current contract, we will do that. We'll look into, if you're trying to compete against another broker, or it's a case, you put in, but you think maybe the contract's not doing what it should be doing, let's take a look at it. We'll take a look, and it might be a situation where we can't help you, but a lot of times we can. So that's our story on disability. And I really, and I'll even say this, Jason mentioned we're talking group insurance today. Just one little nugget here. We do disability really well, and we do disability for owners really well. I've already talked about our group definition for business owner comp. We also have a really cool product on executive benefits, an IDI executive solution that we can layer on top of our group contract, and it can be guarantee issue in a lot of situations. And so just some really neat things we can do with LTD for the right client. Not every client will really buy it, will dig into this and want to fund that fully, but the ones that do, we can really deliver a solution that fits really well for what they're looking for. Life insurance, I won't spend a lot of time on life. Life is life, right? You die, we pay. A few things that do come with it, though, some value adds. We do add a will and legal document center, which is really nice. It's, I kind of call the will. You'll look at the legal document thing on the far right side of the screen. It's kind of like will prep for dummies. It's a filed and approved resource for your clients and their employees to go out there and get a will done or a living will. All state filed and approved. It's basically like will prep for dummies. They go out there and answer the questions. Once it's done, they print it off, get it notarized, and it's a legal binding document. It's a really nice service that we push out there, and it really gets a lot of utilization. We really like that feature a lot. Vision insurance. Vision's pretty straightforward. We partner with VSP, so Vision Service Plans. One of the nationwide industry leaders. Have a lot of success writing vision insurance, and if you're familiar with VSP, well, then that's our product. That's what we do, and we do have some flexibility in regards to frequencies and some allowances on your materials. But again, a really nice complementary product for what we do across the board for our clients. Supplemental benefits, and we do have an extension into the kind of the worksite arena, critical illness and accident. I like what we did here. We've simplified the approach. If you're familiar with this marketplace and you're familiar with the Duck and Aflac or Colonial, all great. They're good at what they do, but what they do is a little bit different than what our solution is. They kind of have a menu item that's maybe 7 pages long, and we're talking about accident that pays reimbursement for every little procedure that can be done. Our accident product is a lump sum benefit. So. A story I like to tell is one of my account executives in my office, who's service facing, would be an outlet for Jason and his team. She about 3 years ago fell off a ladder. She was they're getting ready to move, and she was kind of organizing the garage, and the garage door was closed, and she was up on a ladder, and she forgot to lock the garage door, and her husband came home and opened the garage door, and she's 6 feet high in the ladder, and she didn't really know what to do. She kind of freaked out a little bit, and she fell. And she shattered her kneecap, broke her leg in 2 places, chipped her elbow, had a lot of damage. It was, she was in rehab and recovery for about 18 months. It was a really, really nasty accident. And so we talk about like an accident policy. So if she would have had like a traditional, what I call a traditional plan, like through Aflac or Colonial, her claim cycle would have been 18 months. She'd have been submitting claims every month for rehab. Every time she went to the doctor, did an x-ray. And that's fine. That's how those plans work. And it might pay out a lot. Her payout would have been a lot with those injuries. How the principal plan works is we aggregate all those potential expenses for that injury, and we just lump sum pay it up front. She could have waited 18 months to get her full payout with Aflac. And then with our plan, she would have received like $15,000 in a week, and the claim's done. And she can do with that what she wants with the money. And so again, we talk about simplicity, about making it easy for your employees, making it pain-free and noise-free. Both of our CI and accident plans are built like that. I mean, just really straightforward, very simple. We think very competitive. We write a lot of these policies on a consistent basis, and again, a very complementary, solution to what we're already doing on the core ancillary benefits. So that's that. Those are some examples of what we're covering on our CI contract. There are some examples on our accident, and you'll see that those are all lump sum benefits. So talk about like a comb up to $15,000 and things like that. We're not nickel and diming the person for X-rays and rehab and all that stuff. Really, there's three things that I think set us apart. I think I started earlier was the dedicated support model in my office, and really it kind of starts with Jason and his team and their dedicated approach to you and your business. And then our team kind of is a dedicated approach to Jason and his team. We have a group of about 3 or 4 individuals that are part of my team that all have specific duties in what we do, whether it's quoting or new case installation or service and renewals or enrollment support, right? Because we can also extend enrollment support solutions for you. That's all here in my office here in Kansas City. And we directly support Jason, who then in turn can directly support you. So I think that's a big piece of what sets us apart. Of course, flexible, competitive solutions. We really have a full suite, and we can really pivot our plans around it to make them fit and work. And then I think the ability to kind of package those deals. Package those deals and make them work financially for you and the client, but also where the service going forward is going to be clean, and so you don't have to worry about the billing issue or the claim issue. And probably the last kind of asterisk on that is just I think what I do and what my role in this industry is to do all those things well and easy and clean, but also from a business perspective, I mentioned earlier, it's also to drive profitable revenue. This is revenue that can drive your profits, because you're not going to be expending a lot of expenses and time dealing with what I'm delivering. So, those are probably the 3 things I would focus on from a principal perspective.
Yeah, I think I can echo, the dedicated support. I think Principal has been a great partner for us here at Legacy. Implementation is a breeze. Proposals are really clean and easy to understand. There's not a lot of confusion with regard to what benefits are quoted or what the rates, how to calculate the rates. There's not a lot of extra work involved. And the sole case submission and implementation process is a pretty straightforward one. From the service end, I know our team, Bob can probably speak to this better than I can, just because he deals with it on a daily basis. But when we have our weekly meetings, we don't ever talk about issues with groups that have Principal. Anytime we're talking about ongoing support issues on ancillary products, it's typically a different carrier. I know Greg doesn't like to hear that we might have relationships with other carriers, but it really does come down to the dedicated support, and then just the top-notch service levels that we receive from Principal, and that all is extended. We're able to then turn around and provide the same level of dedication and support based on a great relationship we have with a carrier. So, Greg, I appreciate you being on and kind of walking through the different portfolio of products and services that are offered. I didn't see any questions pop up in the Q&A in the chat.
I got a quick question for you.
Yeah.
Greg, you talked about the executive level product you have to layer on top of like the disability, I think it was. Can you talk a little bit about that?
Yeah. So it works. It doesn't have to work with group insurance underneath it, but it works best when you do, because if you talk about there's always the financial aspect of any benefit decision, right? But reality is we talk about the limitations, and there are limitations of group insurance, right? So I mentioned the idea of the business owner who made 100K of W-2 and another $200,000 of K1 for a total income package of $300,000. Depending on case size, if that's a small employer under 10 employees, our max benefit is $6,000. If we get over 10 employees, we can maybe go to $10,000 and maybe 15 possibly, but probably not likely unless they get a little bit bigger than, like that 15, 20 life group. I mean, all the volume, the case size, the volume of payroll, all that stuff kind of determines what we can do from an LTD plan design perspective, meaning that we have limitations of what we can deliver for maybe that key employee, for that owner. So if the owner earns well above the mark of what the group insurance policy can deliver, there's a gap there, right? And if there's a gap of income between maybe $6,000 and $25,000, is it a concern of theirs, right? If they're making about $30,000 a month and they have a $6,000 LTD policy and they were to get disabled, is that enough? And some people might say it is enough. I'm okay. I put enough away, and I've self-funded, that financial risk. But there are a lot of folks out there that when they hear that equation, I earn $30,000 a month roughly, and my disability policy is only $6,000 a month, and I know that my wife and I spend, or my husband and I spend $20,000 a month, $30,000 monthly, right? And that's usually the case. We're almost always spending everything, almost every dollar we have access to. And so if that member sees that as a true gap of coverage, we have a solution for that. And so we can deliver an individual disability contract. We'll couple it with our group insurance policy. And depending on the group, we can even do that on a GI basis. So there's no medical underwriting. There's no blood or urine or anything like that. It's really a clean solution. And it really is an individual contract. So talk about like recruiting, key employees, retaining key employees, taking care of themselves. We can construct a plan that will, of course, give the benefit of volume on group insurance, from a financial perspective, a price perspective. But because their specific needs are maybe theirs and a few key employees and their income levels, their needs are above and beyond what the group policy can deliver. We can construct an IDI solution, an individual disability solution, that gives them that coverage of gap between what they make and what the group insurance policy delivers. I hope that makes sense. And I'll tell you, not every client wants it, and we know that. But the clients that get it and understand there's a gap and understand that there might be a concern there, they're willing to listen. And usually the folks that are willing to listen, you're no longer selling them. They're buying from you because they have a need.
Yeah, I think, what I really like about that is, a lot of times, you go after the medical and then they try to layer it in the ancillary, but this may be a way to reverse that, right? If you can't get the medical, but you may be able to get the ancillary or something like this, show benefit in and then creep your way into the other way. So it's a way of getting into customers in a different way. So yeah, I thought that was pretty unique, and I think it fills a key need out there.
Yeah.
Greg, is there an industry that comes to mind for a solution like that? I mean, I'm thinking as you talk through that, I'm thinking back, 20 years of my career, groups I've talked to where maybe I've missed an opportunity to talk about a solution like that. I think one that comes to mind immediately for me would be like a medical practice.
So I've been a principal for now, it's 10 years now. So 10 years almost to the day. And
I knew you before principal though, so.
Right, exactly. But I say that, so I didn't have access to that product and that solution until I got here. And my initial thought was exactly that. Well, it's white collar, it's physicians, it's attorneys, what have you. And I will tell you that in the first 5 years, I didn't sell a single, combo case group and then the IDI layover. But in the last 4 years, I've sold probably 10 a year because I finally got it. And there is not an industry that is excluded. We wrote a roofing company in Texas last year, and then I'm working on a financial advisory company right now. And so it's all spectrums. It really and the reason it is, here's the main reason, because that solution caters to the white collar, owner of maybe a blue collar industry. Because we're not going to cover the laborers, we're going to cover the executives, the owner, and usually the owner of even a roofing company, he's not on a roof anymore. He's managing, right? He might go out on the site, but he's not up on a roof doing it. And so that roofing company was 800 employees, and we carved out the top 100 employees and did an IDI solution on top of that.
Wow.
And that was a really big deal. And that's unique, but that just points to, it's not really industry specific. It's really client specific. Do you have, and usually the number is three or five employees or more that earn enough money where the group contract can't deliver a true solution. There's a gap. And if there's a gap, any industry can work. And it takes the right individual to really understand the need. That's more clients and need based than it ever is industry, because we write almost every industry with that solution. It's just it takes the right client to understand. I didn't know. I had no idea if I got injured. I only got $6,000. I make 25 grand a month. My wife spends, my ex-wife spent $15,000. So.
Hey, Greg, I tell you, for our agents out there, I think that's a great opportunity to market the gap, right?
Yeah.
What's the gap of what you really currently have, what you could have, and that's a way maybe to get into companies. So I really like that.
Yeah, it is quite honestly, it's my favorite sale. It's my favorite solution to talk about. And I'll tell you, so I'm not. When we go down that lane, I know enough to be dangerous, but I'll bring in my specialist. His name is Gianni Camito. That's all he does is the gap kind of supplemental IDI solution, the executive benefit, individual disability plan, and he is really good at what he does. He's a good friend of mine, and it's so much fun. It's such a different sale and discussion than just talking group insurance, because you're really digging into a key employee, an owner, and what their true needs are, and you're delivering on that need. It's really neat.
Yeah, and what also does is allows you to differentiate yourself from the competition, right? If you go in, you talk about group health, you can do all this, but then you lay on some of these other added benefits to it. It's a differentiator between you and your competitors. So
yes,
yeah.
That's great. Well, I appreciate the insight there. That's like I said, that's one that I've largely ignored disability my entire career, but I hear about it. I hear about that solution, that IDI solution on top, and that's something that I think, like Rick said, I think you can use that to prospect. You may try to get the group medical, but you're maybe competing on price, where you can go in with a disability solution and compete on strategy. So appreciate that. Thanks again for being part of our Carrier Product Breakfast series. We look forward to seeing you at our next event. We do have resources available to you on our website at legacybrokerskc.com. You can also reach out directly to anyone in our Legacy Brokers team if we can help you with an RFP or just help you put a case together. Our next events are posted on our website. You can register for all of the events ahead of time, and we'll make sure to get you the appropriate links so that we can see you next time.
Thank you for watching. We hope you enjoyed this episode of our Carrier Update series. Be sure to check out all of our carrier updates on our website at www.legacybrokerskc.com. Also, follow us on LinkedIn to join the conversation and let us help you with your group health cases. Whether you need help with a tough renewal or a new prospect, we shop the entire market to get the most competitive rates for your clients. Let our expertise in self-funded health plans be your competitive advantage. We provide an entire suite of back office support services for agents, from quoting to case install and renewal support. We have your back every step of the way. Always here to help agents just like you when you need it. Send us an RFP today and see for yourself.